Welcome. Mr. Trump's tariff has created a lot of excitement, lot of anxiety worldwide. Why not select a sector which is on a strong footing, has been on strong footing from last 20 years? Yes, there have been some issues in that particular sector in between, but they have been very stable. That is the private banking sector and the services sector. How to get good stocks in this particular sector? You don't require any fundamentals. You don't require any technicals. You don't require any quantitative analysis. Just select a focused fund which is having a very few list of good stocks and good investments in that particular mutual fund can give us all those stocks which are really been consistently giving very good returns from a longer term perspective. Such stocks we can take from a focused mutual fund, and from that derive those stocks, buy those stocks at 52-week low, and then make some good trades going forward and good investments also. Always concentrated investments. Most of the successful investors, most of the successful fund managers have been suggesting that select the right stock, invest with a complete focus and good investments in those stocks at the right time, right valuation will give good returns short term, medium term, long term. One such fund has been focused 30 fund, which is really consistently giving very good returns and has shown 16% compounding growth last 20 years. Such fund is not only giving which sectors are good, which sectors it is focusing, and which stocks it is focusing, and a good concentration of those stocks which has been consistently giving good returns in that particular fund, and people who have invested from long 20 years have seen very good returns, and the focus of this fund has been majorly 33% in the private banking sector and has been consistently giving very good returns. Even when the market falls, the fall is less compared to the index. We have recently seen the banking sector has been very resilient in the recent 3 months fall. The selection of such sector by this fund has been very smart and giving very good returns. Downside, the risk is less, the correction is less, upside, the returns have been more. What more one as an investor will look at it. Let us see that particular sector, that particular stocks and that particular fund which can give us not only for us an opportunity to invest in that fund or invest in those stocks which this fund has selected and invested in a big amount and a huge amount and very focused, very concentrated, which is really satisfying the principles of making good wealth in the stock market. Come, let me show you this particular fund which is focusing 33.3% on banking, private banking sector, auto ancillaries around 16%, cash, it's maintaining 11% cash. Always maintaining a good cash level is good because whenever market corrects, you get good opportunity to accumulate more of the stocks which you have already you have done the analysis, already you have done a list, and when the market falls, you have cash enough to invest in those stocks so that your average of pricing will come down, your costing will come down, and when the market goes up, you get very good returns. And 11% on services sector and healthcare, 6.62 sector, 6.62%. And we very well know that Mr. Trump has not put any sort of tariffs, improvement in the tariffs or increase in the tariffs in the current scenario in the pharma sector, in the healthcare sector, which is very clear. So private banking currently is also undervalued because the performance has been very good, the financials are very good, but the performance in terms of price reactions are decent enough, the valuations also decent enough. If you see, this particular fund is currently at a valuation of PE 24, which is a decent enough performance in this particular sector. And if you see, this particular fund, that is the HDFC focused fund, has been consistently giving very good returns from a 5-year perspective, 3-year perspective, 2 years perspective, and even 1-year perspective, better than any fund in the long term also. And since starting almost 20 years back, the fund has been giving 16% on an average return per annum. You see the 5 years return has been 33%, 3 years return 22%, 2 years return 27%, 1 year return 14%, and 3 months return is minus 2%, which is better than the market returns, and 1 month the return has been 5.67%. That means when the market is falling, the fall is less, but when the market is coming up, the returns have been extremely good. If you see on year-wise return also, in 2024 it's 24%, 23 it is 29.5%, and in 22 it is 18%, and in 21 it is around 40%, and in 2020 it has given a return of 4%. Let us see the stocks which are there in this particular mutual fund, which is giving consistently good return. That is the SBI Life Insurance, Cipla, HCL Technologies. We could see the concentration is only 34 stocks. Generally in mutual funds we are seeing 50 stocks, 70 stocks, 90 stocks in a particular fund, which is really diversifying too much with poor returns. And here it's completely focused, having very few stocks in this particular fund which can give very good returns if the fund really succeeds well. We have HDFC Bank 9.69%. We have seen HDFC Bank has not given any return in the last 3 to 4 years. Even then, this fund is giving very good returns in spite of few of the stocks in the concentrated portfolio did not perform. That's the management of the fund which is being done very well. The fund manager is very much experienced. He's worked in Goldman Sachs and in many other investment banking and fund management companies, and the fund management has been very, very good. We have the top private banking stocks in this particular sector. Yes, we have some more services like hotels, technology, pharma, IT stocks in this particular fund, but still they are really focused, they are really performing well, and the returns have been extremely well. It also has a combination of large cap, mid cap and small cap. Large cap, it's about 67%, which is a very good assurance that your investment in this fund will be safe enough, because the percentage of large cap is very, very high. Being a large cap invested fund, it's able to deliver 16% compounding return in the last 20 years is a remarkable achievement by this particular fund. Generally, as an investor, we try to invest in small caps and mid caps so that our returns are more, but the risk is also more, but speculation is also more in this particular fund, but still the returns can be good on a longer term basis. But this fund, being in large cap, it's able to deliver very good returns of almost average 16% return per annum in the last 16 years. In the last 16 years, and this fund looks to be a dependable fund from a longer term perspective. SIP also can be a good investment, or a lump sum investment is also can be good. I am not a SEBI analyst. Please do your research, take time, advice from your financial advisor, and then make investment in such funds and make good returns on a longer term basis. If you want to invest in these mutual funds, DM me, or I'm giving the link of a Funds Bazaar where you can open a free account for whole of your family with one login, and you can directly invest yourself. There is an app for this particular Funds Bazaar app, and you can invest any financial instrument for yourself and for your family, whether it is fixed deposit, whether it is insurance, whether it is mutual funds, whether it is stocks. You can invest in one platform with one login. Please do your research, take informed decision, and make good wealth on a longer term basis. Happy investing. Thank you.